Hey, Jeff, thanks for joining me.
Thanks for having me.
Great to have you. News story, mortgage rates hit 23-year high. Big story this week. They've reached the highest figure since 2000. The average borrowing rate for a 30-year home loan topped over 7.3% this week, according to Freddie Mac. We're seeing home prices rise alongside with those mortgage rates due to very, very low inventory. We're seeing that climb in rates on the back of the Federal Reserve's decision to keep interest rates high, and signaling they might even have another rate hike this year as they continue to fight inflation. We're currently seeing inflation measured by the Personal Consumption Expenditure Index at 4.2%, more than double the Fed's target of 2%. Your thoughts as we see rates over 7% and making new highs?
I mean, this is kind of where I think I've said in other videos where I still feel like this is more inflationary from the news cycle than it is from actual history. I went back through and tried to dig in a little bit closer and found that, if you look back to the 70s, the average rate is 7.74% across that, from the 70s to 23. So we're still less than the average, and I think it's more of just sticker shock than it is actually looking back through history and people understanding that rates, this isn't really that different than rates have been historically.
Yeah, I think that's a great point. We're moving more to historical average. You and I have, talked about this offline also, and I think we're kind of in agreement that what's really different about this time is the pace of change, how rapid this has
That's
come
right.
in, and I think it's pretty difficult for people to just deal with having the rates not so long ago at like below 3% possibly, and now be looking at more than double that in a very short period of time. It does create some stresses um, for the system. Maybe really quick, just your thoughts in terms of commercial, not just residential, but what you're seeing in terms of financing activity in commercial segments in addition to residential.
Yeah, I mean, I think it's similar. There's less lenders that are doing it. I think more, it's a lot of what history has always done with banks. Banks get scared when interest rates rise, but truth is rates are rising in commercial probably dramatically quicker than what you're seeing in traditional residential lending. But I think buyers, acquisition specialists, whatever you want to call them, are looking at a different debt constant than what the average Main Street residential home buyer is looking. They're just seeing, oh my God, it was 2% or 3%, a couple of years ago, and now it's 7%. I still think it's just sticker shock where, commercial is, I don't want to say more prepared, but more readily prepared is the only way I know how to describe it for commercial.
Yeah, and I do think that now that we've, as you pointed out, gotten more back to this kind of historical average, I think we're getting close to the point where the Fed is likely finally getting close to done. They don't seem to be signaling it anyways like multiple higher hikes. I think it was always kind of their intention to get back to more of this historical norm. But I would say some pundits do have the worry that the pace they've gone, how fast they've gone with this, could create problems of the sort we've already seen a little bit in some of the smaller banks like Silicon Valley Bank. We do got some players here in the financial system holding treasuries, having liabilities in debt that's just not yielding at competitive rates anymore. I do think that's something we have to kind of keep an eye out here for.
Oh, for sure. I agree. I think if you actually look back to what I'd mentioned, from the 70s, up to where we are today, the only period where we had probably well, through the 70s and then of course into the 80s, 70s, I think you probably had almost as equally a dramatic increase as well. You went from like a 7 to almost 13%, but the 80s where you kind of hit the pinnacle of rates, the 18 to 20%. We're not even close, and inflation's coming down. I mean, maybe it's stagnated a little bit, but we're not we're not anywhere near where we were before.
Okay, good stuff. We'll be keeping an eye on the rate environment, financing, and what's going on in the commercial as well as residential space. Thanks a lot, Jeff.
Great. Thanks, Steve.